If you've been sitting on the fence thinking about buying, selling, or investing, you might already be losing money without realizing it. Interest rates are shifting, inventory is tight, and creative financing is changing the game. So before you make your next move or miss your best one, watch this video.
Put your dogs out. Who put your dogs out? It is a beautiful day in Atlanta, GA. That is where I am tuning in from. Agents, if you are able to go to my Facebook page and share our live so we can get our webinar out to your audiences, we would greatly appreciate it. I'm going to give you a few moments for that.
Hey world, welcome to the channel. I'm Makeba, your global realtor based right here in Atlanta, Georgia, connected with phenomenal agents across all 50 states and nearly 30 countries. Around here, we don't just sell homes, we sell earth. This is your hub for the systems, strategies, and mindset that changes lives, starting with yours.
We are thankful again for all of our professionals in the room on this Sunday fun day. I hope you did get out and have some fun today. I actually got up early this morning. I had some heavy comforters and pillows that I needed to wash. So I was at the laundromat early this morning with my fabric softener and my Tide Pods and my dryer sheets. So I've been out early, definitely. Home, got situated. Let me go ahead and turn off this waiting room. Perfect. Thank you so much, Pam, for letting us know that you did share it on your Facebookie. All right, well, it is 2:01 and we want to respect everyone's time. We see you over there, Carmelita, opening the blinds, letting the sunshine in. All right. I am Makeba, global real estate agent, just like you. My primary source the foundational piece of my business where I'm licensed is in Georgia. Metro Atlanta is where I tend to take care of people and people I'm not able to take care of locally in the state that I am licensed in or globally. I refer business out, which means that we are still helping people buy, sell, and invest in real estate, whether licensed in that state or not. We use the relationships that we have built, and you can easily see in this room, these are real estate agents that we all have relationships with, that we trust, and we trust enough to get on a virtual stage and share the knowledge and wisdom that we have available to us. We're not holding on to it. It's not anything secret. We want to let you know what's going on in these real estate streets, because if you're watching the news, many times it is just propaganda. Like Pam has mentioned before, baby, they trying to get us scared instead of in a place where we love ourselves more than our landlord, right, Paul? Well, I am going to take a few minutes out of our time before we officially begin our webinar to introduce the other agents on this virtual stage with me. Carmelita Collier, the stage is yours.
Hey everybody, I am the Carmelita Collier out here in these real estate streets, servicing all that I can meet. Anyway, I hail from Atlanta, Georgia, born and raised. I am a true Georgia peach, probably one of the originals, the OGs here in this state. I have been in the business since 2004. I love what I do. As you can see, I'm doing two things at one time right now, multitasking, because I love it. But I'm so glad you guys are here. I do hope that you find this information valuable and that you take good action steps to move into your new home. Thank you. I'll pass the mic to Hakeem Herring.
Hello. Good afternoon, everyone. My name is Hakeem Herring, your real estate partner. Like Carmelita, over 20 years in the real estate business, specializing in real estate investing, helping individuals with generational wealth build their legacy through real estate. This seminar is amazing. It's an opportunity for us to come together on a virtual stage where we're sharing the Conversation of Keys, a home buyer seminar, which is the national event. So we like to invite real estate agents, home buyers, lenders, professionals alike to join this call so that you can learn more about the home buying process. We have our lender, Paulie Conti, on the line, who's going to talk to us and unlock the secrets of creative financing, different opportunities that are available out there. Again, welcome everybody for joining us, and I thank you. Every first Sunday of the month, we host this live virtual call, so make sure you mark your calendars. So thank you again for joining us, and I'll pass it back to Makeba.
Thank you. So we have Lisa Mutcherson in the room. Please introduce yourself, and remember, you have your people watching you on Facebook live or replay. Say hello to all.
Hi, everybody. My name is Lisa. I'm a realtor here in Atlanta, Georgia. I'm a part of the Closing Gurus, and we are powered by eXpRealty. So I'm excited that you actually came into the room and joined us. So congratulations.
Thank you. Thank you. Pam Armstead, your turn on the mic.
Hi, everyone. My name is Pam Armstead. I am licensed realtor in Georgia and Alabama, and I've been licensed since 1993. And I'm an original peach too, Carmelita.
Okay, now I bet you guys can't guess where Nikki's from. Go for it, Nikki.
Hello, everyone. I won't even say where I'm from. I'll let you guess. But I am a realtor here in Georgia, and I specialize in helping those that are new beginners or new homeowners, as well as empty nesters. But I'm willing to help anyone else that is in need of selling and buying. So I'll give you guys a chance to guess where I'm from.
Where are you singing to us, girl?
I am from New Orleans, but I live here in Georgia.
I hear Louisiana too.
All the way, New Orleans, all the way. I am a Cajun queen.
I hear it.
Yes, ma'am.
Mr. Johnny Cash.
Hello, everybody. I've been in this business since I got my license back in 1993. And what I specialize in, where my passion lies, is showing people how to position their home ownership to create wealth. We all believe in the dream of home ownership. A lot of people kind of got out of thinking they would be able to, but that's part of why we're here, to show you that it is a possibility, it is a reality, it is happening, and it can happen for you. So tune in, have your ears focused so you can understand what that process is, and make dream home ownership a reality for you.
Definitely. Let's go. Hakeem has put in the chat, if everyone can please let us know where you are tuning in from in the chat as well. Give us a fire emoji if you are excited for the information you're about to learn. And we have one more agent on the stage, Monifa.
Hello, everyone. Monifa Taylor here. And I am always excited to be on with everyone who is looking to purchase homes, whether it's to purchase for owner occupancy or for investment purposes. So I am so happy that you have made the choice to come in and listen in and get some education on what you're doing, because it's a process that most people need a little bit of help with. So we're here to guide you along the way. So I'm Monifa Taylor. I'm originally from New York, but I am in Georgia now, and I've been in the business for about 23 years, and I am complete.
Perfect. Hakeem, go ahead.
Yes, indeed.
Go ahead in the chat and let us know where people are tuning in from, please, sir.
Oh man, we got people from all over, from Dallas, Social Circle. We got Atlanta, Fayetteville. We got people chiming in from all over. This is beautiful.
Definitely. And it's Sunday, man. Sunday fun day. You guys took an hour or so out of your day to come in here and see how your life can be changed with real estate. Whether you are a seller that needs to buy a home, but you have to sell your home to buy your home. you're a first-time home buyer and you didn't know if ever owning a home could be an opportunity for you. If you are an investor looking for creative financing, you are definitely in the right space. Paul is going to fill your ears with all of those wonderful nuggets to help you do what it is that you need to do with real estate, whether you're able to do it now or when you are able to do it is the most important thing. Just taking the steps, being connected to the right people in real estate is most important and going to help you elevate your life and amplify what it is that you call legacy for yourself and your family. So we actually have 7 steps to home ownership, because everything that we mentioned, whether you're selling or buying, first-time home buyer, or you're an investor that is needing to purchase a property, the flow of it is the same. Depending on what state you are in, the steps may be a little different, but for the most part, the beginning, the middle, and the end are similar enough for us to be able to share this with you. And so again, we are welcoming you to this journey of purchasing your home. So step 1 is understanding your financial situation. We need income. We need savings. We need to know what your expenses look like, how much money you have coming in your household versus how much money you have going out of your home. Those are the most important pieces of purchasing a home. And of course, when you have money going in and out of your home, income, savings, expenses, that means you have a JOB. If you want to buy a HOME, you must have some sort of employment that definitely can be verified. And when we are out there saving, many times the money that we earn is the money that we use to survive. So in saving and getting that money ready, sometimes you have to get a side hustle or two. Definitely cutting down on your expenses, maybe not being able to get your hair done for a while, your nails done for a while, instead of going to get your car washed. Maybe you out in the front yard with the water hose. We remember that back in the day, wherever it is that we can cut our expenses to set ourselves up to get our goals accomplished is what is most important. Getting pre-approved for a mortgage. That is what has to be done if you're going to get financed. If you have some magical cash that fell out of a tree, we all want that money tree to show up somehow, some way, but most of us are going to have to get a mortgage. So Paul is here to share more in depth about the pre-approval process, but something we want you to be mindful of. Pre-approval versus pre-qualification means 2 totally separate things on the spectrum for a real estate professional. When you're pre-qualified, that means you just had a conversation with a mortgage professional, you answered a few questions, and that's it. They have based what you have said on what it is that it takes to purchase a house. And as a real estate professional, when we see an agent come to our listings stating that their client is pre-qualified, that is not what it is that we're looking for. We're looking for pre-approval, which means that you actually clicked the magic link or you picked up the phone and you had a conversation with the lender. Paul has taken all of your necessary information. You've uploaded your documents, submitted everything that has been asked of you, and he actually has all of the information in front of him to not make an educated guess, but he has everything that he needs to see that you truly are qualified. Paul also is going to explain a little more about what the mortgage types look like. And what's most important always is you are out looking for your home is your comfortable mortgage payment. A lot of people are able to qualify for a significant amount of home in regards to the purchase price of the home, but we don't want to put you in a space where you won't be able to get your nails done again and get your car washed and go out to eat and go on vacation. We want to see you on vacation too. So we want you to be in a comfortable space when it comes to your mortgage payment, and not house poor is a term that we hear a lot of times. Carmelita?
So now that you have spoken to your lender and you've started your journey, and the most important thing is to lay that foundation and understand what is your purchasing power, right? So knowing what your purchasing power is, because you've had the conversation with your professional service provider in the form of a lender, you can further define what your needs are going to be. So consider your commute. Are you wanting to live closer to your job in a certain school district? What does the location look like? For me, I don't live in the city. I live outside of the city because I know when I'm home, and I don't worry about the hustle and bustle of traffic. And for me, I like the quietness of a small city. What does that look like for you? Determine the size of your home. Is it going to be 3 bedrooms, 4 bedrooms? Are you just starting out? No kids yet, no pets yet, but you're going to grow into the kids or the pets. Understanding your size as you continue to grow and live in your home. And what are your future plans? Is this going to be your first property and then an investment property? Is this going to be the family house later down the road when all the kids come back and the dogs and the pets and the parakeets? What is it going to look like for you? When you're house hunting, be completely transparent with your realtor. Let them know what you need, exactly what you need, because what that person's going to do is going to mirror what we have on the market to your needs to make sure it is a match, so that you're not seeing things that may not fit your criteria. So once you've had the foundation of your understanding your budget, knowing your needs and your wants, and you out shopping, that's the fun part, looking at all these beautiful homes. It's time to make an offer. What does an offer consist of? An offer just basically says, I like this house and I want to offer you X amount of dollars for this house. It's the offer price. Past that is any contingencies. If you're a first-time home buyer, or if you're a move-up buyer, you may have a house to sell. That could be a contingency. Another contingency is going to be your due diligence period, which is what we call the inspection time. You want to make sure, and it's very important, that you have your house inspected, whether it's a resale or a new construction. It's vital to have someone else, another trusted provider, take a look at your home to let you know about the home that you're getting ready to purchase, because it is the single most largest purchase you're going to make in your life. With an offer comes earnest money, typically 1% to 3% of the offer price. That is money that says, hey, I am going to put down my $5, more than that, because I'm serious about this house. Okay? And then lastly, you're going to have the timeline. When do you want to close? And your lender partner can tell you, kind of guide you through a good timeline for your close. With the offer, there may come negotiation strategies. You may offer 2 bananas, the seller wants 8 bananas. But you're going to come to a happy meeting with your realtor and they'll help negotiate. They'll have a strategy for negotiating to get you the exact amount of bananas that everybody can agree upon. In the counter offer, you may ask for repairs or credits or something to that nature. But remember, you're the buyer and things are negotiable. Next slide. And I believe that should keep.
Home inspections and appraisal, that is the next step. After you have decided, yes, this is the house that I want to purchase for myself and my family, or not family yet, my pets or not pets yet, depending on where you are in life. It is time for the home inspection to happen. So the time period I was just talking about is called due diligence. So after due diligence is over, we have decided what it is that we have offered on the home. The seller's agent has shared the information with us about what the seller has decided they would accept for the offer, and the terms, the contingencies, all of those things in between. We have the home inspection, which is a third-party individual that comes out with an unbiased eye, looking at the bones of the home, looking at the electrical, the plumbing, what your HVAC system looks like. If you have a septic tank, it is time for you to get that inspection done if the seller of the home hasn't done it already. It's time to get the termite inspection done if the seller hasn't kept up on that. If there's a pool, you want to check and make sure that all of the safety precautions are taken. And after the home inspection has taken place, you've had everybody come in that needed to let you know the bones of this home is sound. You can go ahead and continue to move forward. Then you are going to pay for your appraisal. Now, during this time, we have spoken again, Carmelita shared about the earnest money deposit. And there are 3 times during this time together as real estate professionals assisting you as a buyer. Our superpower is to make sure that your earnest money leaves with you. If for any of these 3 reasons you decide, or the bank decides, that this home is not going to work, we are there to protect your earnest money. So one of the times is during the due diligence period. As you've had the home inspections done, you've decided, yeah, no, this is not going to work out. So that is one of the times when you're able to walk away with your earnest money. Home inspection, as we mentioned with the, as we are talking to the seller and we are trying to negotiate, if the house doesn't appraise, then that's a time for negotiation to happen again. So either the buyer would cover the difference of the appraisal, or the seller would cover the difference that it had appraised for, or there be a happy medium, or everybody could walk away, because a bank is not going to pay more they're not going to finance you more than what the home is valued at. So that's what the appraisal is for. And the other time is the financing contingency. So if for any reason Paul comes back to you, and other than you doing something intentional, which we have seen, unfortunately, when people go try to pay for a whole house full of furniture on purpose because they changed their mind and they decided they didn't want to get this house, or they went and got a brand new car because they were like, let me mess my credit up so I can make sure that I don't get this home. We want to make sure that once you get your pre-approval and the lender, Paul, has said, hey, you be still, don't move any money. At that point, we want to make sure that you make it to get your keys at closing by making sure your credit stays where it is or improving, but definitely not getting worse. We want to make sure that you are getting your home for your family, for your children, for your legacy. So make sure that we're being still during this process. We've got the home inspection, the financing contingency, and the appraisal. And so after all of these magical things have happened, your real estate professional is continuing to speak to the agent on the other side. If there were things that needed to be fixed and repaired, and typically there are, even in new construction, those things are still happening. We are gathering receipts, taking pictures, making sure that people are meeting the timeline, because honestly, purchasing a home can take anywhere from 21 to 30 days if it's being financed. If it's a cash purchase, then it takes less time, because typically all they're waiting for is the title to come through. So we don't want you to think that it takes a long time, but it is a lot that goes on during that time, and making sure that we have the timelines on our calendar, knowing exactly when things are due, making sure that communication stays directly towards your agent. The agent is speaking to the other side as well. As real estate professionals, we're doing all that we can to make sure that our clients are happy and being taken care of. And so within 72 hours, you will receive your closing disclosures. This is an estimate of what it will look like, what money that you need to have wired to your closing attorney so that you can cover the costs. And again, we are going to make sure that we review these documents. If there's anything that needs to be discussed, we're having that conversation prior to closing. So once we get there, everyone knows exactly what it is that they are going to be responsible for. And again, negotiation is continuing to happen the entire time. Now, the final walkthrough, if this is a residence that was vacant, then we can do it the day before. When I have a client who someone had to move out of the property, and we tend to like to schedule the closing later on in the afternoon. So that morning we go in, we make sure the house is broom swept clean. Everything that is supposed to stay is there. The repairs are made. and anything that needed to be completed has been done as well. Because of course, if we go and those things haven't been completed, then that means we're not able to close at that time, because as your agent representing you, we want to make sure that this house is exactly what it was supposed to be once you have purchased it and taken on that responsibility of a mortgage. And so, of course, on signing day, you are coming. Again, your wire has been sent over. All of your closing costs, you know what those are, because we have reviewed the documents 72 hours prior to. We're bringing your ID, and your certified funds have been shared. Carmelita.
Congratulations, homeowner. So you've secured your home. What is the next steps? Prior to closing, you may want to go ahead and contact the utility service providers in the area to go ahead and schedule to have those items turned on. You also want to change your locks, get your smart camera, Ring camera, whatever it may be, and you want to update your address with your employers, the post office, your banks, and everything, so that your transition into your new home can be seamless. So I want to ask you this. You can put it in the chat. What is the one thing that you can commit to today on your action items to get done as you prepare for your new home? Next slide, Makeba. And I can't see the chat. Oh, Paul said pack. That is right. Everybody pack. So here are some final tips for a successful home buying experience. And we're going to recap a little bit. Know your budget. If for any reason, and Paul can speak to this when he comes on stage, if for any reason you're not at ease or just kind of unsure, I promise you, the lender is there to help you. Don't be afraid. They can walk you through the process and answer any questions you may have. Also, don't skip the inspections. Please don't skip the inspections. Even in the most competitive markets, a thorough inspection can reveal costly issues that aren't visible during your showings. It's very important because you want to protect the investment that you're getting ready to acquire. Plan for your future. Consider the home's resale value in the potential neighborhoods that you're moving into, and stay calm. We got you. We got you. Welcome to the wonderful world of home ownership. Makeba?
All righty. Well, there we go. The 7 steps, so easily laid out. It sounds so simple, of course. And when you have the right real estate professional on your team that has been in the real estate streets for a while, communicating all of these things, letting you know what is coming ahead is very helpful, whether it may happen or not, but just to have the conversation to know what those options could be for you, what it is that may occur. You know, we want to make sure that our clients are ready to go when it's time to go left or right or stand still, just to have had that conversation and know what the next steps are. Paul, it is 2:26. See, you guys, we have dedicated time for us as the real estate professionals to share with you. And then at 2:30, Paul, our lender partner, comes on and he shares his segment. And so, Paul, so far, we've done a great job. I think this is like our 4th webinar.
Quick pause. If you're getting value so far, hit that like button. It helps this info reach more future homeowners and investors. Now let's get back into how to fund your next move.
Real estate agents, sometimes, you know, we run over, but here, look.
Guys run a tight ship. You're checking all the boxes. You're giving the education. It feels wonderful. As I listen to all you guys go through this, I look back many years ago when I purchased my first home. Boy, could I have used this back then. I had no clue. I was lost. Jokingly, I told my wife, we're never going to own a home. I don't make enough money. Nobody ever held my hand, let alone walk into a seminar where 5 or 6 or 7 different people showed me their experiences and made it look so simple. So you all did a fantastic job. And again, I wish I had this many, many years ago. So we're going to stay on track with this. And I'm now going to bring in the piece of the puzzle that is very important for most people, which is the lending aspect, the mortgage, the money. So you've got the agents on the call. They're the ones going to find the dream home, but you need a guy to get you the money. I'm that guy. I happen to be Italian from New Jersey. So I got your money. That's a bad joke. So listen, let's get started with this, right? Okay. I want to address a couple things that were said during the opener. Makeba did say something about, and And I'm pretty sure it was Makeba that said something about, hey, if you have to sell a home to buy a home, don't know how many homeowners on the call that we have that have to sell and then buy. I want to share this with you, whether you are one of those buyers or one of the agents. Listen very carefully to this. Have you all ever seen, driven over, or walked over a bridge? Yes? Can I get hand somebody? Yeah, bridge. Okay, bridge. So think about this. A bridge takes you from one place to another. You're going to go over the bridge, through the tunnel. Okay, we got that. You do not need to sell your home in order to buy when you have the right bridge. The bridge loan that I have is something that is unseen by most human beings. Have never heard of this in the manner I'm about to share it with you. The bridge is going to take you from your home to the new home. You can purchase that home in cash. Do not need to sell your home when you utilize the bridge. Now, with my particular bridge, you can go to the new home, decorate it, come back to the old home, try and sell it, go back to the new home, unload your furniture, go back to your original, sell that sucker, and eventually you say, you know what, it's finally sold. Now I can pay the toll. Because you know there's a toll to go over every bridge. But my bridge says, you know what, you don't need to pay the toll now. Go ahead, take care, decorate the new house, go back and finish that one. When that sucker sells, come back and pay the toll. We're going to give you a little time to do that. Like, what? What? Gang, I'm in business since 97. I thought I was the old dude on this call, but apparently I'm not. I have never had access to a bridge that defers the toll and helps me buy a house without having to sell yet. If you're one of those buyers, we need to talk. If you're one of the agents, we need to talk. So I want to clarify what Makeba says, generally speaking, is correct. But you all now have access to a very cool bridge, and I'll help you go over that thing. That's number one. Number two, I believe it was Carmelita that mentioned something about a home inspector. Whether you understand the process or not is immaterial. You have trust in your agent. Here's how I look at a home inspector. I'm going to make an assumption because I saw most of you smile and I saw teeth. I'm going to make an assumption most of us have been to the dentist. It's a safe assumption. I see some beautiful choppers out there. So my point is this. Here in the Italian culture, if you will, some of my older relatives, in-laws, etc., man, they don't want to go to the dentist. Every time I go to the dentist, he finds something wrong. I'm not going. After about 15 years of that, she ended up having an abscess so big her face was swollen. $7,000 later, 2 surgeries, nightmare. Your home inspector is equivalent to your dentist. A dentist is going to go in there, look at all the nooks and crannies, all the cracks and crevices. You know, right here, your teeth look good, but he's going to get inside there and do an evaluation like a dentist to help you understand, oh, we got to take care of this. Or no, everything looks great. That's what I think a home inspector is, akin to a dentist. So when Carmelita's saying, don't skip this part, go to the dentist, even if it's just for a cleaning. Let him give you a good bill of health. I'm sidetracking, gang, but those 2 points I thought were important for all of us to understand. And as we recognize something, let's do this. Take notes as if you're required to teach it, because you are. You are, especially if you're an agent on this call. So now we talked about the bridge and we talked about why we need to go to the dentist. Now let's talk about something else Makeba had said with regard to the news, the politics, the media, the propaganda. Good, bad, or indifferent, doesn't matter what side you're on. They're all nuts, right? So think about it this way. Who are you to tell me when I should buy, sell, rent, lease, live with family? Who are you? Wait a second. Gang, listen, we allow that information to infect us. We so much so allow it that we actually bring it into our family room. It's called a television. And we tune in and we listen to what these people are saying. I don't know that you hold my beliefs. Do you believe in God? Do you follow what it is that I believe in? I'm supposed to be listening to you. Wait, gang, listen. Be very careful. I'm not going to say renting or buying is right or wrong. I'm going to give you the tools. That stuff that we're allowing in our household to infect us coming from the television, slow it down. Television. 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 They're telling you their vision. Does that line up with your beliefs and your faith and your family? You make that decision, not me. Gang, why do you think they call it a television program? Come on now. They're putting it right out there. So here's how I look at it, right? I got the 4 F's: faith, family, finance, fun, in that order. If it doesn't line up, you don't get my attention. God first. Everything else falls in line. So what you may be from time to time unintentionally or intentionally allowing into your brain, they're driving this fear to manipulate. I prefer to bring cheer to educate. Educate, empower, give you the tools, help you make whatever decision is in line with you. That's what this call is about. That is the plan. Please hold me accountable to that. So recognize where the source of the information is coming from. And this is a beautiful environment. Happy. I mean, think about, why isn't anybody on the television educating me about a bridge loan, how to accomplish my goals for my family? Why aren't you telling me about that? Because you don't want me to know? Why aren't you teaching me about these things? Encourage me, empower me. That's the thought process. So with that being considered, gang, I am your perspective coach for the next 20 some odd minutes. I'm going to educate, I'm going to empower, I'm going to give you all the tools necessary to make the decision that best serves you and your family. I'm a resource for you. The one thing I like to say and start with is this. If we are someone who is renting and we've not yet purchased, or we're not sure that we can, my job is to empower you during this call. But here's the one question that should start the tone. If you had to put on a chart, landlord or you, who would you say you love more? Do you love your landlord more than you, or do you love you more than your landlord? I know it seems like an obvious question, but then when I say this to you, prove it. If you actually did say, I love me more than my landlord, I'm going to say, prove it. Because every single month you reach into your pocket and pay your rent. So you are investing in your landlord's real estate future, not yours. But you just said you love you more than him. Prove it. Now we're going to learn today how to redirect that and say, you know what? It's about time I start investing in my real estate future instead of his or hers. I'm not saying renting is bad or good. I'm a perspective coach. I'm going to get you to see things a little bit differently. And that resonated with me that, man, if I knew how to do it, I would. Well, you're coming here now. So this could be a decision that we make. Gang, if you don't change it, you've chosen it. If you don't change it, you have chosen it. Thoughts or questions so far before I continue with this freight train coming ripping through your family? Okay, here we go. Here's how easy home buying is. So incredibly simple. There are 3 factors. I'm going to start with this one. Credit is number 1. I do them in this particular order for a reason I'll share with you in a moment. Credit. Here's the thought process. I want you to think about this, and I'm going to make an assumption, unless you tell me otherwise. At some point in time in all of your lives, you have gone to the doctor. We've had a doctor's visit, and we gave blood work. The blood work is equivalent to me seeing credit. You would not and should not self-medicate until the doctor analyzes your blood work. After he or she sees your blood work, they're going to say, oh my goodness, Paulie, your cholesterol's high. Let's do this to get the number down. Your blood pressure's through the roof. Are you married? I am. That's why we found out. Some of these are funny and some of them aren't. Paulie, we need to get this blood pressure in order, right? My point to all of you is this. In my many years of experience doing this, I found some people that actually want to go and work on their credit before they talk to me. That is akin to self-medicating before you've seen the blood work. Allow the financial expert, the credit expert since 97. There isn't a credit report I haven't seen. There isn't a credit report I haven't fixed. Nothing you could say to me would shock me, make me scared, nervous, or embarrassed. Zero, nothing. So you're coming to someone with many years of experience looking at thousands of credit reports. I can fix anything. I'm not even saying yours needs to be fixed. I'm saying in this particular case here, this isn't something that should ever hold anybody back because this is easily fixable. Now let's start with a couple of basic criteria. Now that we know we should go and get our blood work looked at before we address the credit. And the reason I tell you that is because, number one, there are two different systems out there for credit. And in my experience, Credit Karma has become very popular. It is a wonderful consumer information site. That's it. Here's why. They use something called a Vantage system to generate a number, a credit score. That system is the Vantage system. Mortgage companies use the FICO system. So if any of you say, hey, my credit score is 700, I'm going to say, where did you get that number from? And you say Credit Karma. I'm going to say that doesn't mean anything because it's on a Vantage system. Mortgage companies do not acknowledge that system. So please keep in mind, they are wonderful to let you know somebody pulled the credit. The scores dropped, the collection appeared. That's wonderful. But the score means nothing. Means nothing. So I need to take a look at the actual system, the FICO system that pulls the scores that mortgage companies use. If anybody has a question about that, I'm going to stop. I'll take a breath. Talk to me about outside sources to generate a score. If nobody asks a question, I assume comprehension. I keep moving. Okay.
Nothing in the chat. Thank you.
Wonderful. We'll keep going. Again, you got to do that and let Makeba know because I can't do two things at once. I'm a man. So I can only do the presentation. Now, the thought process is this. Second part of it is this. One of the other reasons you should not self-medicate is because sometimes people have a collection on their credit report. I've had them as well, folks. It could be like a copay for a doctor. I didn't know. I didn't even pay attention. Next thing you know, there's a $50 collection on my credit report. I had no idea. That collection might sit there for a while. It impacted the score. The scores came down. All of a sudden, you're getting ready to buy a house. You have your credit pulled. You're like, what? Where's that collection from? Holy smokes. And I'm going to say, wait a second. How old is that thing? That's beyond 2 years old. Don't touch it. But I want to pay off my debt to improve my score. If you pay that off, you have reactivated bad debt for another 2 years. Don't touch it. Let it stay. So there's an example of someone wanting to do the right thing and clean their credit up, but depending on where it came from, what it is, and how old it is, it may not benefit you from the mortgage side of things. So we would want to leave that dormant. That's another reason I say, please don't self-medicate. I'm sorry, Makeba.
Paul, we did have a hand up, but Michael put his hand down. Michael, did you have a question for Paul or a statement?
Yeah, my question is this: they're using two different types of sources there. Is it based off of the same information or is the information tweaked a little bit as well?
So great question, Michael. So the information, to my knowledge, your credit card company will report the information to the credit agencies. They have a different algorithm that generates a score. FICO's been around for a long time. Vantage is newer. Mortgage companies don't like Vantage. They use FICO. The data is the same. The algorithmic information within the system spits up a different number. The Vantage system tends to give a higher number. The FICO system gives a lower number. Mortgage banks want to be more conservative.
Right on.
Great question, brother.
Hey,
Great
thank
question. Yeah. I can't control the algorithm. That's how they put that behind the curtain. All this information gives you this score. All this information gives you that score. Perfect. Beautiful question. But there's the analysis for you. Okay. Well, let's see. Where was I? The credit systems. Okay. So the point is, have your credit checked by me first. And I'll share this with you. Number one, I do what's called a soft pull. Soft pull. It's like me just looking under the hood of your car, just a little quickie peek. Hello, what's going on under there? It does not impact your credit, and there is no inquiry that gets reported. It's a soft pull. So I take a peek like that first to see what's going on. If it involves a little bit more intricate work, we have to do surgery, then I want to do a hard, take a look at all of them and get deeper involved. If it is required. If it's not, it's not. No big deal. But that's the advantage of a soft pull. No impact to you. Now, with that being considered, let's talk about credit. Credit ranges from 0 to over 800. The longer you pay on credit, the higher chance you have of breaking that 800 score. Generally speaking, you can get a mortgage with as low as a 550 credit score. I'm not saying that's anything to brag about or anything to put on your shirt and talk about a 550 score. I'm not saying good, bad, or indifferent. I'm letting you know there are people on this call that have that. How can I buy a house? I only have a 550. Well, you can. I'll show you how. Today. It's not hard. Now, the higher the score, the more favorable options you have. It's just like if you were going to lend somebody money. I'm going to lend you money, but 5 people told me you never pay them back on time. I'm not going to lend you that much, but I'll lend you a little bit. I talked to 5 people. They all said you paid them before it was even due. How much you want? There is common sense to this, gang. So the mortgage lender, the investor, is saying, let's check with these other people. They're saying he doesn't pay on time. We don't want to lend as much. That's the idea of now increasing the score. The higher the score, the more favorable options you have. Put yourself in the shoes of the lender. If you check with 5 people and 5 people said, you pay before it's due, you're phenomenal, they're going to want to give you money hand over fist. That's the idea. Now, when I take a look at that, I can help you improve the scores. It is simple. When my children all turned 18, they all have 750 credit scores. How's that possible? They didn't even have a credit card. Listen to me very carefully. Anybody on this call can talk to somebody else and take advantage of what I'm about to share with you. I add all of my children to my credit cards as authorized users reporting to credit. Authorized users reporting to credit, which means they are not getting a credit card, but my 10-year good credit paying history now populates to my children's report. Boom. Like that. I have a 550 credit score. How could I buy a house? Let's talk to mom, dad, aunt, uncle, brother, cousin, sister, poker buddy, bowling buddy, friend, neighbor. They don't have to be a relative, gang. You can go on anybody's credit card as an authorized user reporting to credit. You will then get their good pay history on your report like that. Now, let's make sure that person has paid the credit card on time. Because if you get put onto a crappy card, that crappy report is now going to your credit as just like the good one would. So keep that in mind. So with that being considered, a very easy way for you to start getting your scores bumped up is to piggyback off somebody else's good credit. Now, the person, me in this case, there is no negative impact to me. My children have the benefit of being on my history. There is no negative impact to me as the person doing that. Folks, I could do that for 20 people if I wanted to. No negative impact to me. And you do not have to wait until your children are 18. The credit agencies have no age restriction. It's the credit card companies. So when you communicate with Chase, Citi, Wells, whomever, and say, hey, what's the age limit that I can add my children, sister, mother, father, brother, aunt, uncle, neighbor, best friend, poker buddy, bowling buddy? What's the age limit? They'll tell you. We don't let it go on report for anybody under 15. So add them when they're 15. I've heard some go as low as 13. Add them. Give your kids the advantage when they turn that age to be able to get a mortgage, a credit card, a cell phone, homeowner's insurance. Everything's credit driven, folks. This is bigger than just the house, but there's about one of the easiest tips I can give you to bolster your credit scores. Questions or thoughts about that? Stay with me. I'm dumping a lot on you.
We have jewels and gems in the chat. We have wow in the chat. People are definitely learning. Thank you.
Woo! Okay, here's the next one. I'm not telling you to get Netflix. I'm just saying if you have Netflix, Netflix will report to the credit bureau. If you are currently paying utility bills, they will report to the credit bureau. If you are paying rent, your rent will report to the credit bureau. And I got news for you. Some of the rental companies will go back 2 years and report your history to the credit report. I've been paying $1,500 a month, Paulie. Great. I'll give you the website. Go on the website, put that information in front of your landlord. He completes that paperwork, and 2 years of your good rental history now goes on the credit report. Boom. Bye-bye, $550. You understand this? This is so simple. So simple. Why aren't they teaching me that? I don't know. Why are you listening to them? So let's
Michael
think about
has his hand up again, Paul.
Oh, go ahead. I'm sorry.
Michael?
Okay, so let's say I do have that 650 credit score, and you add somebody, your dad adds you, right? And now you've got a 750 credit score. Am I building my credit beyond that if I'm continuing my credit and doing other things? Is there a point when I should want to be removed from having his credit score so that I'm building my credit score? Or does it just stay advantageous to remain, I don't know, indefinitely, I guess?
Great question, Michael. Again, you're 2 for 2, brother, today. My wife's been on my credit cards for 30 years. You can do whatever you want with that information. I kept my children on. So what happened was when the 750 scores hit, I had them apply for their own credit cards without me on it. They got those credit cards. They started their own history, pulled mine off, maintaining their numbers on their own. My wife and daughter are still on my cards for years. I just forget to take them off. It doesn't matter. So you're in control of that. When it comes time for the mortgage, this is a beautiful question. When it comes time for the mortgage, for the sake of this example, I put my son on my credit card. That credit card has a monthly payment of $500. That $500 also impacts his debt ratio. Not going to go into details because nobody wants to hear them. However, if I can show proof I'm making the credit card payment and he's not on it, it doesn't count against him. He can stay on my card.
Wow.
So you're in control of that. How long you want to do it, how short. If you feel as though, okay, Dad, help me, thank you. Aunt, uncle, grandpa, thank you so much. I can stand on my own 2 feet right now. I'm good. Wonderful. Come off the authorized users. Again, no negative impact to the individual that helped. You're in control of the timeline. It does not hurt at all staying on because the person that actually holds the card has been making the payment. As long as we, the mortgage company, can show proof of that, it doesn't count against you, but you still get the benefit of the score.
Fantastic. Thanks, man.
Yeah. I have a cheat sheet, gang. I have a cheat sheet I can give all of you. If you follow up with your agent and communicate with me, I'll give you the cheat sheet. And if you apply today, you'll get my hairspray and my shaving cream for $19. Listen, I'll just give you the daggone cheat sheet for nothing because you showed up on a Sunday. All right, so let's do this now. I've taught you all the other things you can add to increase your scores. So you are no longer permitted to use score as an excuse for not becoming a homeowner. You could try and find something else, but you can't use credit. Now, when we get to a point where I'm looking at your credit, I will give you all the tips and tricks like I've shared with you here. There are more that will help you bump your scores even more. So there is nothing holding you back from credit. Before I go on to the next thing, because there's only 3, credit's that one right there. Any questions about credit, please, before I move on?
We want to have fire in the chat if you guys learned something magnanimous and phenomenal.
Okay.
Someone adding you to their credit does not harm them at all whatsoever. It helps you. Please put fire in the chat if you are. I saw somebody driving, so if you're driving, don't worry about it. But everybody else, fire in the chat, or we have all of those opportunities to have some bubbles pop up or confetti. Yeah. Let Paul know that we hear what it is that he's saying. Alexis, we see your hand up.
And drop your email in the chat if you want that cheat sheet. We need to reach out to you. We need your email and telephone in the chat so you can get the cheat sheet.
Thank you, gang, very much. I appreciate that. That keeps me going. Looks like we're doing something right.
Alexis is handed up.
Oh, go ahead. Go ahead.
Yeah,
Alexis.
so question. Yeah, so just to clarify, so does the person who is added, you automatically are taking on the exact score. So if you already have your own credit history, and let's say it's subpar, and you're added to someone else, is it just automatically bumped up to the exact credit score, or is there an averaging of the two? Like, how can you kind of just elaborate on that part?
We got a good crew here today. We got a good crew here. That's a very good question. I believe I said, and these are all recorded, but I believe I said my credit history populates, not my score.
Okay.
My credit history. So as an example, if you have a 500 and I have a 750, it's going to bring you up, but not to the 750. So what do? Add more, get more, right? Look at it kind of like a seesaw. 550s down here. I got to keep stacking the 750s to get the 550 to go back up. So it might require more than 1 or 2, if that makes sense.
Wow.
Okay.
Yes.
Yeah.
Okay. Yeah, thank you.
Michael?
Yeah, it'll bolster the score. You're not adopting my score because my score took me years to build.
Right.
And we're talking about somebody who has a very, very low score. It's going to bump you, but it's not going to give you my score. My history is what populates, not the score.
Okay. Thank you.
Yeah.
Thank you. Great question. Michael?
So are you saying that we could potentially add a client or customer to our
You're on fire today,
history? Just like
so I think I know where you're going. And let me share this with everybody. Now, listen here.
This is being recorded.
Listen here, brother, cousin, sister. I got a 750 credit score, and I've been paying on this credit card for 20 years. I'm just saying. I worked 20 years really hard to get my scores up here, and I'm going to give that to you like what? Just because you're a good guy? Yes, I am. Let me help you buy that house. Yes, I am. I love you. You're my brother, my sister, my cousin. Yes, I am going to do that just for you. Maybe we talk a little, I don't know, dinner maybe, back rub, a glass
that
of wine.
pinky ring, Paul. That pinky ring is showing out.
So that's the Italian coming out, man.
Michael, stop pushing me. It's getting dangerous now. Come on. Good question, Michael.
Hey, there's another question in the chat from, I think it's Tatia Oles. I can't really see the name, but what's the 550 program look like?
So good question. I hate to go into details. I just want to enjoy the burger. Don't want to know how it's made. But since you're asking the question, 550 credit score requires a 10% down payment. Let's do simple math together, gang. Paulie, I want to buy a $300,000 home. I have a 550 credit score and no time to improve it. What do I need? A 10% down payment. If the home is $300,000, you would need a $30,000 down payment if you have a 550 credit score. Now, again, go back to this. The lender's not bad. I'm not a bad dude. Think about you lending money to somebody. It's the same concept. There is some level of common sense when I can check with 5 people. Who are the 5 people? Wells Fargo, Chase City credit card, your Fulton Bank car payment. I'm checking with the 5 people, and this is what they told me. You don't pay them. And now you want money from me. Put more skin in the game. Show me you're more serious. Hold up, I don't have the 10%. Okay, can you knock off a liquor store? Wait, hold on. Can you go to your grandmother and borrow? Delete that, Makeba, take that out. Can you go and borrow money from a relative for the purchase? Yes, yes. We'll let you get gift funds from grandma, grandpa, aunt, uncle, brother, cousin, sister, or relative. Yes, yes, yes. You could do that. But I'm just telling you, with that score, you need a 10% down payment. I should have just stopped. Less is more sometimes. I should have just answered a daggone question.
We have another question in the chat. Will student loan debt affect the home buying process?
Student loan debt has a very similar impact of any other kind of debt. Here's something I will tell all of you. I want you to understand this, please. There's 2 things you can't write off in a bankruptcy, and government debt is one of them. Come on now. The government's just not going to give it away as much as we think they're supposed to, or they should, or whoever. I don't care where you are, but the government set this up for the government, not for you, not for me. So when they just cut a check and say, here's 60 grand for your student loans, you are not allowed to write that off in a bankruptcy. It'll follow you to your grave. Now, the one thing I want to teach all of you, if you have the ability to apply for an income-based repayment plan, please do that for this reason. The payment that reports the credit is the payment we must use. Paulie, it's in deferment. I'm not even paying it. It doesn't matter. The government does not allow us to disregard that debt. They want their money. Even if you're not paying it, we still have to generate a payment. The payment the government requires us to generate is much higher than an income-based repayment agreement. So I would encourage all of you, if you have that, communicate with them and apply for an income-based repayment plan. It will bring the payment down substantially, and that will have less of an impact of you buying a home because you've reduced the monthly debt with no negative impact to your credit. Hakeem, you have a question?
Yes, sir. We have a question from Carla. How does it work when you already have a mortgage and you're interested in purchasing an investment property? We got some good ones for you today, Paulie.
This is scary. I would love to do this, gang. First of all, let's talk about the bridge again. Everybody loves the bridge. So the idea is, if you're looking to bridge that gap and to acquire that next home, I can show you how to do that, but I need the specifics of your equity. For the sake of educating everyone, your home's value is here. This is the balance of your mortgage, and the difference in between is called equity. Theoretically accessible money to you. The bridge program I have only looks at equity. It does not look at income at all. We don't ask for income documents. We don't care if you're employed. Nothing matters. We only look at what? The equity position. So what I'm giving you is the overview. Then we have to set up a private call so I can learn about the intimate details of you to figure out which program you then fit into. So please, if you are a buyer and or an agent, you're going to want to get with the agent, schedule a call with me. Makeba has my contact info. We'll put that in at the end. Let's schedule a follow-up 15-minute Zoom call. And then we'll go into the details of your blood work, your equity, what your objectives are. I will help you do that. I lend in all 50 states. I have every program under the sun, and I have programs people have never even heard of. I can help everyone.
Thank you, Paul.
Okay, income. Let's talk about this. What Makeba said earlier, a JOB. She is kind of correct. She's kind of correct. Let me start by saying this. In theory, you need to be able to show that you have income so that you can afford the mortgage payment. She's right. Mostly. There are mortgage programs that get creative when it comes to income. I'm going to give you some examples. For our self-employed folks, they don't want to show all of their income. Keep this in mind. I say this all the time. You can either beat the government or you can beat the mortgage company. You just can't beat them at the same time. Pick which one you prefer to beat. Normally, you should be beating the government, which means filing lower so you're not taxed so high. But then what does that do with your ability to purchase? Not much at all. There's a deviation. Here's what that means. Instead of showing the W-2 and the pay stubs and the tax returns, maybe we take a look at 12 months of your bank statements. And what we do is we look at the cash coming in, but not the expenses going out. And then based on your credit score, determine what is the average of those deposits. And then we say, okay, you make $5,000 a month based on your deposits. Don't need pay stubs, don't need W-2s, don't need tax returns. Creative financing. Now, in that case, that person does have a JOB. Makeba's right. In that case, I'm self-employed. I don't put the money in a bank account. I put it in my mattress. I'm Italian. So I have no bank statements to show you, Paulie. Now what? Now we can go to your accountant and say, can you give us a profit and loss statement? Sure. Paulie makes X number of dollars a month. Boom. There you go. You do have a JOB. You're just not funneling the money through your bank statement. We go to your accountant, ask him for a P&L. He generates a P&L. That's your income. Don't need pay stubs, W-2s, or tax returns. Paulie, I'm married 15 years and I'm going through a divorce. I don't have a job. I've been raising my 3 children and my jackass of a soon-to-be ex-husband. So I don't have an actual job at this point. No problem. You don't need to have a job. You don't need pay stubs. You don't need an employer. You don't need anything. Prove nothing because you don't have it. You can purchase a home proving and showing absolutely nothing as far as income is concerned. This is for many of my divorcing clients. And for some strange reason, I seem to be a natural magnet for the women. And generally speaking, some of these women do not have jobs. They were fulfilling their marital obligation, doing a fantastic, wonderful job, but there were no paychecks in there. So it's based on a credit score. And if your score is good enough, you can buy a home proving nothing with a 15% down payment. Proving nothing. What? Yeah. Wow. So my point is, Makeba is kind of right. But there are many, many different ways to help you achieve home ownership based on your particular situation. Keeping that in mind, creative financing, something I do as well, as Hakeem mentioned in the very beginning stages. So we can look at the box. Don't go to ChatGPT. Don't do that. Come to ChatPKC. It's Paul Kenneth Condé. Come right here. Hit my button, and I'll tell you what's up. Because there are mortgage programs that are proprietary. That means they're not endorsed by Fannie, Freddie, the government, VA, nothing. It's their own group of guys that got together and said, we're going to start lending money like this. They make their own rules, gang. So Chat and other sources don't even know about this stuff. You have access to Chat PKC. I thought that was cute. Nonetheless, so that's the income piece. So the idea
Get my
is now,
T-shirt. When you see me in Miami, I'm gonna have my T-shirt. Chat PKC with the QR code on the back. They're gonna scan me.
I love it. I love it. So keep that in mind, gang. The reason that this is a good pairing, God brought all of us together for a reason. And it's because there are a lot of people out there, in my experience, that just don't know what they don't know. So they didn't know to ask the question. It's not their job. It's our job. So I feel as though it's my responsibility, my gift from God, to not only share my empowering words and my perspective to help you, but then also bring some mortgage product to the forefront, credit education that we need to help everybody achieve what they want to achieve. And again, I'm going to remind you, I am not saying buying or selling is the right thing for you. I'm not saying renting, leasing is the right thing for you. I'm not saying living in mommy's daddy's basement. I'm not saying it's the right or wrong thing to do. I prefer to introduce cheer to educate instead of fear to manipulate. I'm going to empower you, which is what I've been doing today. So you determine through prayer in your family what path you're supposed to be traveling, and the agent on this call and myself will help fulfill that. Generally speaking, there are criteria if you're going into what's called a full doc, and I put it in quotation because there's so many variations, but I got a W-2, I got pay stubs, I got tax returns, regular full doc loan. There are criteria. I'll share those with you in just one moment. So let's recognize you can't use that as an excuse anymore. We just found out you can't use that as an excuse anymore. And now we'll talk about number 3. Money. You need to have a little money saved toward the purchase of the home. Here we go. You ready? Generally speaking, you want to have a minimum of 3% down payment. All you do, get your phone, get your calculator. That house is $300,000 times 3%. I need $9,000. That's your down payment. Then there are costs. Government, township, taxes, blah, blah, blah. Cost. Let's say another $9,000. I need $18,000. Holy, I don't have 18 grand. How much you got? 3. Okay. Let's take a look in your area. There are grant programs and down payment assistance programs. We have some proprietary down payment assistance programs that are only with our mortgage company. And we look at the other ones that are out there and say, we'll do you one better. Now, I want to teach this to you. These down payment assistance programs have strings. Most of them have strings. They're not bad. They're not bad. Just understand the strings you're pulling. That's all I want to do for you now. In some states, in some counties, in certain situations, you can get down payment assistance, $5,000, $10,000, $20,000 to help you acquire your first asset. Absolutely. Some of those programs say to you, hey, we need you to live in that house as your primary residence for the next 5 years. After that, that money we gave you disappears. Wonderful. Wait a second. What if I want to sell in 3 years? You got to pay us back plus interest. Oh, okay. Just know what strings. That is no big deal. There's nothing wrong with that, gang. I just need you to understand what you're signing. And if it comes out and it says this is a government grant, your ears should be perked. The government grant? Our government grant me? No, they're going to give money to other countries, just not here. No, not us. We'll give it over there. Wait, what? What did you just do? Come on, this is a different conversation, but what? You're not listening to me. Why should I listen to you? Get the hell out of here. So my point to you is this. All I want you to do is have an understanding of what the grant is saying. That's all. I'm not saying they're good or they're bad. You can make that distinction, but let's understand what we're putting our name on. That's all. So in the event you needed 15, 18, 20 grand to buy this home, if there's some grant money we can pull on and we can say, you know what, I'm going to live here for the next 10 years. I'm not going anywhere. Wonderful. Let's go get it. Let's go get it. No problem. If you are a veteran, you don't need any money for a down payment. If you're buying a home in a USDA zone, you don't need any money for a down payment. Then the additional down payment assistance programs can cover the closing costs. Or in a situation right now where you got a house that's been sitting for 4 months, guess what? I'll buy your home, but you're going to cover my closing costs. Hello? I don't place offers. I give settlement notices. Come on. Most of us like, hey, I'd like to place an offer. No. This is a settlement notice. Here's what I'm giving you. Here's the date I'm settling, and here's the time you get paid. You want it? Yeah, come on now. This is fun. This is fun. So, generally speaking, those are the 3 things you need. You need these 3 things. You need your agent on this call and Paul. Package this together, you've got the right team. Homeownership is around the corner. Around the corner. And I'll go back to, who do you love more? Your landlord or you? I'll do my best to be quiet now and take any questions you might have from me. None?
No, it looks like we have a hand up from Tasha Oles.
She's
Nothing?
driving.
Can you hear me?
Yes.
Go ahead, we got you.
Okay. All right. How y'all doing?
Wonderful.
I wanted to know if you did assumable, like FHA assumables, and if so, could you explain it? Oh, Lord.
These people on this call today, this is dangerous. Yes. Great question.
You did.
All right, here we go. You ready? I'm a mortgage guy. I get paid by the bank when I do a mortgage. However, I always do what's in your best interest. And the question that was just asked cuts me out, but I'm still going to do what's in your best interest. That's what I was sent here to do. Here's the example, which I think she just asked. You're looking to buy a home. If that home owner has an FHA mortgage or a VA mortgage, you can assume their terms. For the sake of example, if that FHA mortgage is at 3%, you can assume their 3% mortgage. If the interest rates are 6.5 or 7 today, you can't afford that house. But my goodness, if I got it for 3, I can afford it. Great. So agents on this call, anytime you have a seller or you're courting a selling opportunity, always ask for the current mortgage statement if it is FHA and if it is VA, because if you have an FHA approved buyer or a VA approved buyer, they can assume that note. You have just cut me out of the equation. You can close much faster. So you need the approval from the current servicer. By law, these are assumable mortgages. And they will typically ask the seller to sign a couple of documents to authorize the assumption. And the new buyer applies directly to the servicer to get approved to assume those terms. Wonderful question. Atta girl. Did that answer your question?
Yes, it did. But also, so what if there's like a gap in what's owed and what the sales price is? How does that work? Are you still cut out, or
some cut out? But that doesn't matter. I'm here to help you. Let's do some math, gang. You ready? I'm bringing it back up. We got to go back to the drawing board on this. $300,000 purchase price. They have a $250,000 current mortgage at 3%. So here's what that looks like. Today, if you were to buy that home and get a $250,000 mortgage, the payment would be $1,621. If you assume the current note at 3%, it's $1,055. What? Hold it. I still want the 50 grand you owe me. There's still a $50,000 difference. Two ways to accomplish that. There are more, but generally speaking, the seller can hold a private note for $50,000. The seller can hold a private note for the $50,000. Or you can go get a second mortgage for the $50,000. So here's what that might look like. And I'm just making these numbers up for the sake of example. If you assume the note at 3%, the payment is $1,055, and you got a second mortgage for the 50, it would be $324. So you add that and that together, you're at $1,379 total, all in, still cheaper than the $1,621. Pay that 50 off as fast as possible. Enjoy the balance of the 3% note. That is a great question, and I can help you with that. Again, I don't earn from that, but I can help you navigate that. I'll help your agent navigate that so that you can acquire that home in this situation. And just like we do for all of our good waiters and waitresses, when we get a beautiful meal with fabulous service, we throw them a little tippy poo. Hey, come on now. Come on. Did that help at all?
Definitely. That's showing your expertise. Pull you to writing on your big old sheet on the wall. We use now. You would probably count my change back to me if we was somewhere providing a service. You wouldn't just drop it in my hand.
Paulie is going to work today. He's pulling it all out the bag.
Overtime today, Hakeem. It's overtime, right? All right, guys. So we did one more for you. Makeba is going to share a current home for sale right now, actively for sale. I ran real world numbers on this home. I want you all to see this. The house that you see on the screen, 324.9. These are just abbreviations. I go over them quick because it's the details. Who cares? But I will go over it. Principal and interest, $19.92. Real estate taxes, $231 a month. Homeowners insurance, $100 a month. Mortgage insurance, $143. The circled red number, monthly mortgage payment, $24.66. I got news for you. In Atlanta, Georgia, the average rent for a 3-bedroom home is $24.37 a month. Average rent, Atlanta, Georgia, 3-bedroom home, $24.37. What in the heck are we doing, folks? Now, here's how you figure out if you, on this call, qualify for that home. Watch how easy this is. Take the monthly mortgage payment divided by 0.45%. You need to be earning a month $54.80 in gross income, not net, gross income. $54.80 qualifies you for that home. That's how you figure out the math. You're now doing my job. It's really easy. Once you know it, you just plug the numbers in. Very simple.
So this home is actually listed by Carmelita Collier here on the call. Can you let us know those figures again?
So we'll go over it again, gang, and stop me if you need any clarity. But there are several factors in acquiring a home. So your rental payment is your rental payment. But then the landlord is making all these independent payments. So he just shows you the one number. Here's your rent. There's your mortgage payment. Here's how we generate the mortgage payment. That's your monthly mortgage payment. You divide that number by 0.45%, and it tells you how much you need to earn in gross a month on your job to qualify for that. If we're doing a full documentation proving all the income, that's how it works. Now, I'm going to blow your mind because the thought process is there is a proprietary mortgage product that is being launched by the end of October. It will take this payment, I should say this one, this mortgage program takes effect the end of October. We'll call it November 1st. This mortgage program is a proprietary, only this mortgage company has it because they created the program with a hedge fund on Wall Street. This is how mortgage programs are created. The owner of this mortgage company gets together with a hedge fund, says we need to do something. They did. Gang, the current interest rates in today's market are very good in the mid to upper sixes. This is a 30-year fixed in the fours. 30-year fixed in the fours. No points to the buyer, no points to the seller. You can't touch this. If you attempt to generate an excuse, you're just not ready for home ownership. There's nothing wrong with that. Listen to me very carefully. It took me 7 years to get a 4-year college degree. The teachers were teaching. I wasn't learning because mentally I wasn't in the right headspace to receive the message. It's okay. At the time, I didn't realize this, but God was setting me up even when I wasn't paying attention because I ended up meeting my wife in an accounting class and been with her for 35 years. What's 7 years in eternity? Nothing. But I'm saying this to you because if you want it today, by the grace of God, you've been given the tools, you've got the right team, and you know how to exercise the options. Nothing's holding you back. Do not turn on the television. Questions? Thoughts? Hit me up while you got me.
Hey, I have another question. I may have missed it. I'm not sure. But did you say what the down payment was on your no-doc loan?
15%.
Okay. Thank you.
So when you say no, doc, she knows what she's doing back. I don't know who this woman is, but she's good. It is. So when I say no, doc, you said no. I don't. You said no, doc. Here's the idea. We don't ask for pay stubs. We don't ask for W-2s. We don't ask for tax returns. We don't ask for a job. You leave that spot blank on the application. Nothing is commented. Zero. The only thing we want to see are the assets. What are the assets? Not a motorcycle, not a car, not your jewelry. The assets are shkaro. We want to see money. Do you have the 15% down payment? Yes, here's the bank statement. Here's your approval. Go buy the house. Issue your settlement notice. I don't do offers. Issue a settlement notice. And what does that settlement notice come with? Listen to this, gang. There are really great professional agents on this call. The agent receiving your settlement notice gets a call from me. Makeba, how you doing? Yeah, this is Paulie. I'm the guy giving this woman money to buy your home. I've already got the settlement date on the board. Let me tell you about her qualifying criteria. Assets have been verified, income, credit. I've got everything. I've got homeowner's insurance. I'm done. Does 2 o'clock on October 27th work for you to get paid? Because that's when we can settle. Put my number in your phone. We're working together. Come on. Come on, gang.
Love it. Tasha, was that it? I know you're driving.
You're right. I wanted to ask also, how quickly can you close those?
Well, that's another great. She's dangerous. This one. I don't know who she is. She's dangerous. This girl.
Yeah.
Wow. So the beautiful thing about that program is, think about it. Normally in a normal loan, we got to have this verified. We got to have this verified. We check with your employer. We got to do all that stuff. With this loan, nothing. Give us a bank statement, clear title, and an appraisal. We close. As fast as you put those in my hands, we close.
Thank you, Paul. Michael, your hand is up.
Yes. So back to this 4.5% here. I mean, is that better than a VA loan?
So let me clarify. So I said it's in the fours. I didn't say 4.5. The reason I say it's in the fours is because it is traditionally 1.5 points lower than the current Fannie interest rates. So wherever that number is, we're going to be 1.5 points lower. That's number one. Number two, is it better than? This is subject to interpretation because a veteran gets to buy a home with 0 down payment. This particular loan program requires a 10% down payment. They want more skin in the game. 10% down payment. So when you say better, that is subject to interpretation based on the consumer and the needs of the client. I'm the guy that's going to present the buffet line, educate and empower you on how to use each one of those dishes.
Can that be used with your bridge?
Can this be used with the bridge?
He's got a house.
Loan. Let me go back to the bridge loan.
Okay.
The bridge loan requires no income. Bridge loan, no income. The bridge loan is only meant to help you buy without having to sell. This particular program is a Fannie-based program, but proprietary to the hedge fund. They make their own rules, but this is an income qualifying loan.
Okay.
The bridge loan requires nothing of you. You can use this loan to purchase, but you cannot use it in tandem with the bridge loan. They're two separate products.
Okay.
Yeah.
And we know that everyone's personal journey is their own separate journey. So definitely taking time to get on Paul's calendar, connect with the real estate professional here so you guys can have a conversation with Paul. We do, oh my gosh, we definitely are valuing the questions that people are having in the room because we've been on these Zooms and people were crickets.
This is a good group today. This is beautiful.
It's a great group, right?
Yeah.
Thank you, everybody.
Yeah.
Mr. Scranton, Johnny Cash.
I do have a question, but we have a someone in the chat that wanted to ask a question before I raise my hand.
Merritt.
Yeah, that's me. Yeah, I wanted to ask, do you approve properties that are rated Zone C? I'm talking about they could either go for residential and commercial at the same time. Do you work with such properties?
Yes. So that's the short answer is yes. The long answer is this. I have to know how it's zoned. So typically, if you're talking about a storefront on the street and an apartment above, that's considered what's called mixed use. Yes, I can do those. They tend to lean toward the commercial side of lending because it is a commercial-based product. You have a mixed use opportunity. Again, that could be different. It might be one storefront with 5 apartments above. So that leans more toward residential because of the way that it is zoned. So the short answer is yes. The long answer is I need to see more of the details.
Okay, so where I live, we don't have much of that properties that have storefront and residential in the back. However, we have some properties that maybe because of their location could be used either for commercial or for residential. So I'm particularly interested in using it for commercial purposes. However, I want to see if I can get it on the personal, I don't know, but use it for commercial reasons.
So however it is zoned is how it is to be used.
Okay.
We communicate with the township in conjunction with an appraisal. We look at how the zoning comes in, and that gives us the guidance on how we're going to lend on that particular piece of land or commercial business or residential. I have outlets for all of that, but those are the two things we would do first to find out how it's zoned. The township usually very quickly gives you that information. That would tell us how we want to travel as far as giving you the mortgage for it. Okay.
Okay. Thank you.
Yeah, my pleasure. Thanks for coming.
Okay, my question is pertaining to the quote unquote no doc loan where there's no documentation that's required and the 15% down payment. Being creative, can that 15% be taken care of by a seller carryback?
No. 5% needs to be buyer funds. The other 10 can be gifted. The seller can concess and help, but in that situation can't hold the seller note. Concess. I'll cover some of your closing costs. I'll take care of this. I'll take care of that, but cannot concess down payment. 5% from buyer, 10% can be gifted, 15 total.
Okay, thanks.
This was a good Sunday, gang. We went overtime today. You guys have been absolutely fantastic. Get with your agent. Makeba will put my contact info in. If you want to talk to me, we schedule a call. You, your agent, me, we do it on a recorded Zoom call. We go over the particulars, the details. If you want to have a private call, we have a private call, whatever you need. You've just been given the keys to the castle. Nothing holds you back.
Thank you.
Yes.
Go ahead, Akeem.
Man, Paulie, this was incredible. I want to, just before we wrap up, I want to thank all of the real estate professionals who are on the call. And I want to let it be known that this is a platform that we have created. Makeba, Carmelita, and I have created and invite all of the real estate agents, real estate professionals to join the conversations, the keys. It's a platform where home buyers, you can invite your home buyers, you can invite real estate agents, other professionals across the country to join this call and get information about the home buying process and get to meet the amazing Paulie C, where he deep dives into real life strategies, real life lending strategies to help individuals get approved for mortgages, get approved for that home they want to buy. Now, keep in mind, it's on the first and third Sunday of every month. So if you have a home buyer that's interested in buying a home and wants to learn more, this is the place to plug in. If you are a real estate professional, you don't have to reinvent the wheel. Just invite your buyers, your home buyers to this seminar. Invite other real estate professionals to this seminar. On the first and third Sunday of every month, join the conversation to keys. And I just wanted to chime in and thank everyone. So back to you, Makeba.
I think you summed it up very well. Paul, do you have anything that you would like to share before we go? Carmelita, did you see we featured your house in Covington? You were probably off giving a home tour.
No, I saw that. Guys, the house needs a new home. I mean, the home needs new owners. Please bring me a buyer. I already showed you how you can obtain it, and it's just waiting for you. No, this was wonderful. Thank you so much, Polly, chat PKC, for the information. Greatly appreciate it, and hopefully looking forward to seeing you and many more the next Sunday on the 19th, I believe it is.
One more thing before we go. A couple of people in the chat asked about this session. Is it being recorded or will it be available? Makeba, if you wouldn't mind letting them know where they can find this session and all the sessions for the conversations keys.
I actually have it on my YouTube channel. I can share that in the chat where you can go watch previous recordings. And please make sure after you watch the recording, you go to your real estate professional that invited you to the room and ask them what the next steps will be. You have gone, you have learned, you have shared, and don't hold this information to yourself. You know, if you know anybody else, remember Paul, where is it that you can lend? How many states?
All 50.
All 50 states. So if you know someone in another state and you are tired of them complaining and you know they can do better than just rent, you are going to share the video with them. Share your real estate professional with them as well, because once Paul gets you pre-approved for your loan, then they can go ahead and take that area of expertise that they have, their real estate license, and find an agent in that area to assist your loved one in another state after Paul takes care of them. So I have put the link in the chat. So give us a moment to go ahead and upload that to the World Wide Web. And again, we thank you. We are here the first and the third Sunday, same bat channel, same bat time. You can come in, tune in. I mean, it's different every time. This is not scripted. We never know who Paul is going to be. He's going to have that pinky ring on, that gold chain on. He's going to have his high energy, and he is definitely going to have his pen and paper behind him, sharing what is going on currently in the real estate market, specifically mortgages. And the real estate professionals here on the line, thank you everybody again. We appreciate you. Enjoy the rest of your Sunday. Hakeem, you are unmuted.
Yeah, no, we no, Paulie, we got Tony today. You know, we had Paulie, we had Tony today on the line, so it was great. Like you said, it's never scripted, full energy, full contact. This was amazing, and I'm excited about just providing and pouring into the community and being available. So thank you so much, Paulie, for sharing. Thank you for all that you do.
My pleasure. My pleasure, gang. Listen, real quick, I'll leave you with this, and then I promise I'll stop talking. Circumstances beyond my control have no control over me. Mm-hmm. Circumstances beyond your control have no control over you. Never release your authority, your future that God has given to all of us, to somebody else. You're in control, gang. Especially with what you've been given today, this evening, this afternoon, you're in more control than you ever have before. Don't let anybody take that from you. You have the ability to alter the trajectory of your life if you so choose. God bless you. I really appreciate you guys attending. I'm looking forward to working with everybody. Thank you.
Thank you.
Church day. Amen.
All right. Thank you, Paul.
That's awesome.
Yes, we appreciate you. Unmute and thank you. We thank you so much. And if you're watching this on Facebook, get to the professional that you have connected with, whether you're watching this live or on replay, we are here to assist you. We don't stop. We don't stop.
And we'll get you Paulie's info. Anyone who's interested in connecting with Paul, please reach out to the real estate professionals who invited you. We'll make sure to plug you in directly with Paulie so you can deep dive into some more opportunities that he has. He's full of lending opportunities.
Thank you, everybody.
Thank you, everybody.